And in this video, we continue to read the book, The Cashflow Quadrant by Robert Kiyosaki. This is video number 92. And in this one, Robert is saying, if you want to be rich, you go to change your financial rules. Let's see what he has to say. Excited? Please join me. Hello, welcome to Take a Step to a Better You. In this one, Robert is saying, you got to change your financial rules if you want to be rich. If you're returning, appreciate you very much. Hopefully subscribe, and always please remember to leave a comment, to like the video, all those nice things. But if you are new, my name is Sherifa Nakalema. I'm a business owner here in Virginia, USA. I welcome you. And on this channel, I'm here daily. I'll show you briefly the schedule. Daily, Monday, I do YouTube tips. For those of you who are YouTubers or you know a YouTuber, I have YouTube tips for you. Then on Tuesday, Wednesday, I do this kind, financial stuff, money or business tips. And then I use some experts like Robert Kiyosaki in this book. Then on Thursday, I like to drive around USA, show you places in USA. Also, sometimes if I find someone to talk to, I talk to. That would be my free day, is what I call it, Thursday. Friday is the best day here, I guess, for my viewers, because we go live and we are talking success habits, anything that can make our life better. Then Saturday is Earning Money Online, affiliate marketing. Sunday is motivation. See, we are busy. And now I started just coming in very early in the morning, very late in the night. I talk about anything, but my message is always take a step to make your life better. So if any of that sounds interesting, please consider changing the color of that button from red. Look below the video. Change it from red to subscribed, and consider also clicking on the bell that comes up so you get notified whenever I have all the things coming up. See, it's a busy channel. Now, this video is about this book, The Cashflow Quadrant, and this is video number 92. I've been reading and reading, and the message today, Robert is saying something interesting. If you want to be rich, you have to change your rules from the industrial, he called them the industial-age rules. We're going to see what he means. But before that, I have to show you what this cash flow quadrant means. And I do this only for the new people. For those of you who haven't seen it before, it's just revision. He says that money comes to us from 4 quadrants. You just think about yourself. So on the left, you are either an employee earning a paycheck, or you're a self-employed person, or you're a small business owner. Then on the right, you're a large business owner, or you are an investor. So he wants us to start changing our mindset to the right, to the right. That's a goal. Those are the lessons. So that's the cash flow quadrant. Now, if you want to watch all the ones I've done from number 1, a link is in the pinned comment on the description. The audio is free. I can get it from Amazon Audible, link in the description. You have to go search for this book, Cashflow Quadrant. The link takes you to the catalog. So then you get that audio. It's free for 1 month. Then the physical book, Amazon.com, you just click and go buy. The links are all in the description. So let's go to the reading, the message for today. I choose where to start and where to stop. Those of you who watched video number 91, it was very short. And I said, I intentionally made it short because I recorded it at 4 a.m. And I said, let me record a short one. Then this one is a little bit longer, but still not too long. So this is what he's saying. A subtitle. He's saying, if you want to be rich, you've got to change your rules. And let's see what he says. Robert writing, I've often been quoted as saying, the rules have changed. This is the quotes. When people hear these words, they nod their head in agreement and say, yes, the rules have changed. Nothing is the same anymore. But then they go on and do the same old thing. Now here's another subheading, says, industrial age financial statements. When I teach, he's a teacher. When I teach how to get your financial life in order, I start by asking students to fill out a personal financial statement. It often becomes a life-changing experience. Financial statements are such like X-rays, are much like X-rays. Both let you see what your unassisted eye cannot see. After filling out their statements, it's easy to see who has financial cancer and who is financially healthy. Almost always, the ones with financial cancer are those with industrial age ideas. Why do I say that? Because in the industrial age, people did not have to think about tomorrow. If you worked hard, your employer or the government would take care of all your tomorrows. That's why so many of my friends and family always told me to get a job with the government or to make sure I got a job with an excellent retirement plan. Those are words of advice based on industrial age rules and an entitlement mentality. Although the rules have changed, many people have not changed their financial rules. They are still spending like there is no need to plan for tomorrow. When I read a person's financial statement, it's easy to see what tomorrow might look like for them. Now, he has another subheading. He says, what does your tomorrow look like? Now, he's talking to you and me. What does your financial tomorrow look like? Keeping things simple. This is what I look for in financial. Okay, I'm going to read that again. Keeping things simple. This is what I look for in a personal financial statement. Now, he has this little drawing. Now he has a drawing showing income, expenses today. Like today, what are your income and expenses? Income, money coming in, expenses, what you pay out. And then he has another one that says assets tomorrow, and then liabilities yesterday. And or if you read this one, maybe you haven't, I have videos on this one, the first one, and it explains. It says assets are things that put money in your. This is me now speaking. Assets are things that put money in your pocket. Liabilities are things that take money out of your pocket. So assets tomorrow, liabilities yesterday. I'm going to add my 2 cents at the end of this reading about that. So he says, people with no assets that generate cash flow are likely to have tomorrows that are filled with struggles and stress. When I find people who have no assets, they're usually working hard for a paycheck to pay their bills. If you look at most people's expense column, the 2 biggest monthly expenses are taxes and debt service for long-term liabilities. Their expense statements look like this. Now he has income, and down he puts expenses, and he's showing that they are paying taxes, and he says approximately 50% of their income is getting taxes. And he said debt, they're paying debt 35%, and then they have their living expenses, like the daily expenses, monthly expenses. And then he says, in other words, the government and the bank get paid before they do, these people. People who cannot get control of their cash flow generally have no financial future and will find themselves in serious trouble in the next few years. I'm reading the last part. Why? He said, why? A person who only operates in the E quadrant, employee, has little protection from taxes and debt. Even an S, means a self-employed person or a small business owner, can do something about, even an S can do something about these 2 financial cancers. If this doesn't make sense to you, I would suggest reading or rereading Rich Dad Poor Dad, mean this one, which would make this and the next few chapters easier to understand. As I'm doing this now, since he said you need to read this, if you never, I have a whole playlist, 60 videos on this one. If you search in this channel, Cashflow Quadrant, then you can do this. It's a lot of work. I read 60 videos I have on just this book, or you can just go find it. Find the book. I have links also on this channel. Go get it and read. So because without the basics of this book, actually, you cannot understand this. Because the mental state, you have to be, with this one, it gets you thinking about assets and liabilities and what they mean. So by the time you get to this one, you are programmed already. You follow his language. So that's the end of 92 reading. But I wanted to add my 2 cents. Because of things he said, the financial statement. Now, as I'm saying this, I'm focused on you and me. He says, when he's teaching, he asks students to write down these things. So, number 1, your income and expenses. So, how much do you bring in? Let's go monthly. How much? And how much do you have to spend? Those numbers, put them down. Maybe you bring, if you are here in USA, maybe you make $2,000 and then your expenses are like 1,500. Sometimes the expenses are more. It happens. People live on credit cards, I'm telling you. And then tomorrow. So tomorrow, these are the things that you are preparing for tomorrow that are going to, remember, assets bring money to your pocket. That means maybe you have a rental. That would be a good thing. Like here where I live in USA, if you have some like a rental house, you have a house and people are paying rent to you, that's middle class. And then he says that if you're tomorrow or today, I mean, when you're doing the income and expenses, that's going to include your taxes, your debts, paying the debts. Maybe you have a car loan or some debts to pay, and then the living expenses. So your expenses, that's for today. He wants you to categorize that as today. Then tomorrow, he's talking about assets. You know, assets, when you have a mentality of having assets, you are thinking about your future. So what do you have in there? Do you have something? Depending on where you are, your asset, what you call your asset could be just a saving account. You put away a little bit every month. That could be. And then liabilities is yesterday. The way I understand this, although he didn't explain it, I would say, when he said liability yesterday, that means those should have been paid off. You're thinking about the past. It's best not to have liabilities. You do as much as you can to pay those off because they're not good for you. The liabilities are weighing you down. The loans, all those things that you have to pay off. Okay? But if your assets are building up, you know, you're on the right track. And then also these expenses of today. You know, he talked about people who don't think about the future. When you go shopping, whatever you do, like when you go out to rent a house when you know that you will not spend all the money. You leave a little bit for saving. But if you don't think about that, then you end up paying all the money when you got in a month is all gone on expenses and of course the taxes, and then you're in red. When you are in red, but you don't know it, you may not even know it. That's why he called this that he realized when you put these figures down, you do it for yourself. Either it's healthy or it's not. So if you end up with a negative number, that's me. That's not good. So start reducing, see where you can cut, and then also, like in his language, when he said those things that you cannot afford, that keep borrowing money to buy, you living off credit, how can I afford it? Go do a part-time job or something to afford things cash. If you want to buy something, especially those who care about designer clothing, whatever, that's a bad idea. But if you feel like this is important to you, then go take a part-time job. Go work somewhere a few hours just to earn that. Don't put it on credit. That's me speaking on Robert's message. Okay, I hope I'm not confusing everything. He said income and expenses today, assets tomorrow, you think about the future, then liabilities for yesterday. Remember, liabilities are taking money out of your pocket. Assets bring money into your pocket. And then income is the money you make every month. Expenses is how you spend it every month. I challenge you to write down, like he said, and see what you got. You want to do it? And put a comment for the world to see. How are you doing? Are you healthy? You have a little positive? Even if you have net zero, you'll be okay. Better than being in debt, like being in red. You don't want to be in red. So it's time to figure out how to make some more money, to put it in positive, and also how to reduce on those expenses. Okay? And then start thinking about saving to get an asset for yourself. Leave a comment for me, especially. Put a comment. Is this healthy? Do you have a healthy financial statement? Or is negative? And then he's talked about the industrial age. That if you're thinking about the government will take care of you, if you hear my messages here, those of you who watch me, I say no. You cannot think about the government taking care of you, of the company. The company could even be gone. When you grew up with you saw someone who worked for the same company for 20 years, 30 years. Do you see that anymore? The company itself could disappear when you're still alive. So please, create your own assets. That's my message. Leave a comment for me, especially about the income statement. How are you doing? Healthy or not healthy? What are your plans to make more money? Like I always end them, I say, take very good care of yourself. Take very good care of your families. Take very good care of your health. Please leave a comment, share it. Take a step to better you. Bye-bye.